Ladies and gentlemen, Greg Mikulowski from ForexLive.com. Today's date is December 18, 2024. It's Fed interest rate decision day. Do you want to know what the three major currency pairs are looking like from a technical perspective? I'll go through that in this video, so let's get started. Let's take a look at the euro versus US dollar on the hourly chart. And if I were to do this right here, it would outline the trading range for the most part, going all the way back to mid-November, over a month ago. Yes, there are times where the price moved up below this level right through here and right through here, or above the level right here. This is the jobs day earlier this month. But for the most part, the price has been confined between 1.0448 and 1.0609. Not a lot of room right there. What we've seen more recently is that the 200-hour moving average has done a pretty good job of holding resistance. All these levels right through here where the price came up to that 200-hour moving average and held. In trading yesterday, the price tried to venture above that level early in the Asian session, but fell back below that level and couldn't get near it the rest of the day. We are currently trading above and below the 100-hour moving average. That's the lower of this cluster of moving averages. That level comes in at 1.04956. Ultimately, as we go through the U.S. The Fed funds rate decision, if the price were to go higher, we need to get above this cluster of moving averages. And then we look toward the 38.2% retracement of the move down from the November high to the November low. That level comes in at 1.05628. Then we start to look toward the 200 bar moving average on the 4-hour chart, which is now within this red box. And then we look to get outside of the red box to work toward the 50% retracement level. Those are the projections to the upside, 38.2, 200 swing, high of swing area up through here, and then the 50% retracement. Conversely, if the dollar remains more bid and the price moves lower, then getting below this swing area low down through here outside of the red box, below 1.04481 would be the next key target. And then we look toward the 1.0405 level. I think that comes off of the daily chart. Yes, indeed, it represents the 50% midpoint of the trading range from the 2022 low to the 2023 high. The 50% comes in at 1.0405. So going back to the hourly chart, that would be this level right through here to get to and through on the downside. Yes, we traded above and below through here before moving to the downside here. But that would be our next key target to get to off of out when we move outside of this red box. And that would then look, if a break below that level, would look toward the low price for November, which came in at 1.0332. Let's take a look at the dollar versus yen next. And we'll focus on the hourly chart. This currency pair has been strengthening through the month of December. We reached a high on, I guess that's Tuesday's trade, and then rotated back to the downside and trading yesterday. The low price that we saw on yesterday did break below this swing area right through here and also below the 100-hour moving average, but it was brief, and the price rotated back to the upside into the close and into the early Asian session. Further later on, the price came back down to that 100-hour moving average and back down into this swing area where we have a number of different swing lows and swing highs going back in time to these periods right through here, and we found some support buyers again. So we're back above this swing area, back above the 100-hour moving average. If the price is going to go lower, dollar go lower through the Fed decision, we have to get below the 153.26 level, and then we'll look toward the 200-bar moving average on the 4-hour chart, the 50% retracement, and then these other moving averages in succession, including the 200-hour moving average, 200-day moving average, 100-bar moving average on the 4-hour chart. All those moving averages loom below, keeping the bias more to the upside, actually, for this currency pair. On the top side, this level right through here, I outlined as a level to get to and through, and that's where we're testing right now. If we get above 153.88, we'll look toward the high price that we saw in trading this week, and then we'll look toward this high price at 154.709 as the next key target on the top side. So buyers are in control. Stay above the 153.26 level, move below that level, increases bearish bias, and you should see further downside probing in the dollar versus yen. Stay above is more bullish. Finally, let's take a look at the sterling versus US dollar. And this currency pair is starting to attack the moving averages On either end of the extreme is the 100-hour moving average at 1.2675. On the top side, we have the 200-bar moving average on the 4-hour chart at 1.27310. Traders will be looking for either a break to the upside or a break to the downside through the FOMC rate decision. The current price is trading in between those levels. In between, we have the 200-hour moving average and the 100-bar moving average on the 4-hour chart. So this area is a neutral area. The low price that we saw on trade here today did the right thing and found support against the lower of the moving averages, the 100-hour moving average, and bounced back to the upside. But we are staying below that 200-bar moving average on the 4-hour chart. Look for a break in either direction to give, with momentum, to give traders the clues for the next directional move that we can expect after the FOMC rate decision later this afternoon. So the Fed is expected to cut by 25 basis points, but focus will be on what they project for going forward. The dot plot from last meeting showed that they would expect 4 cuts in 2025. Will that be 3 cuts? Will it be more less than as expectations? We will see. So there you have it. A look at those 3 currency pairs. My name is Greg McCloskey. Good fortune with your trading. Bye-bye now.